Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update for Monday, February 13th through Friday, February 17th, 2012 is sponsored by Realtik. Alright guys, we're going to get right into the mix here today and go right into the charts. This is a chart of all of last week on the 10-minute basis, meaning that each of these candles is worth 10 minutes, and it's each day, Monday through Friday of last week. And what we can clearly see here is the market trended up for 4 consecutive days on extremely light volume. And then all of a sudden, what we saw on Friday was a re-emergence of fear out of Greece. All right, now again, it looked like they were going to pass these austerity measures, and then the people started to riot, and it was pretty big rioting. Now there's dissension in the kind of the cabinet there, in the political system, and it was not based on Friday a definitive deal that it would be passed. And I think that freaked the markets out a little bit because the markets have been pricing in the fact that it will be passed, that everything's going to be okay, that everything's going to be golden. And this was the first sign that the market got it wasn't expecting. All right, this was the first time something kind of a curveball was thrown at the markets. And sure enough, it didn't turn out to be a big down day. The Dow was only down, 100 points or so, actually less than 100. SPY down about a point or so. So it was, give or take around that 1% decline on the indexes. But bottom line is, it was the first time we've really seen this type of decline in the markets in 2012. And clearly you can see, again, the floating up of the markets here going into Thursday, and the new pivot high being made right at the 135.60 level, and then the gap down and kind of choppy sideways movement on the markets on Friday. Volume on Friday inched up a little bit in the 150 to 160, 160 million level range, and again, that's probably the best volume of the week, especially if you look back. I mean, you can see here pretty clearly down at the bottom, volume, especially towards the end of the day, much, much higher than any consecutive day or any day previously of the week, all right? Now, having said that, what we need to understand is why. All right, we always get these news breaks at particular times. And one thing I've impressed upon my members here at InTheMoneyStocks.com is the fact that the news is secondary. Most people, the average American, the average person in this world who's a trader, they think news creates movement. The fact is the chart creates the movement, the news just follows. What do I mean by that? Well, here, for instance, you hit the 135.60 level. Well, that was a major resistance area on the charts. You knew you would get some sort of pullback off of that level. All right, and sure enough, the news comes out and causes the pullback. If we go to the daily chart, you can see it clearly here. All right, and again, just let me zoom out just a tiny bit. See the pivot high going back to the 7th of July? That pivot high was a recent pivot high. Anytime you have a pivot high like that, it's going to create a little bit of resistance in the markets. People are going to see that psychologically. People are going to understand that's going to be resistance, and it's going to create a little bit of a pullback. So sure enough, that little level right there, draw your line straight across, and you clearly get the pivot high of the market on Thursday. And again, just understanding support resistance, if you go into resistance, generally the market's going to stall or pull back. The news just follows and gives the media a reason to talk. All right, and again, every level on the chart where you get a push up or pull back of decent proportion, there must be some resistance or support level there dictating that. All right, on the charts, folks, the key is to recognize you are not too far away from the 52-week high. The 52-week high, again, 137.18 on the SPY. Remember, the SPY mirrors the S&P 500. It's the tracking ETF, essentially, and that's what we use here to show you guys the key levels on the charts. But again, you currently are at resistance. We'll watch to see what the futures open at on Sunday night. We're going to watch the news all weekend long to try and see if the markets are going to see any new developments out of Greece. Syria's a mess. We're not even talking really about that, but that's another issue that is going to keep oil up along with Iran in the Middle East. But going to the markets themselves, it's all about Europe right now. And the key is this, if things get fixed in Greece, or at least, well, they're not going to be fixed. I mean, let's call a spade here. But if you get some sort of bailout austerity measures to pass, and Greece goes away for a matter of 6 months to a year, the fact is you have Portugal, you have Italy, you have Spain, and Ireland is a mess right now. All these countries are now going to need new type of bailouts. Remember how last year, if we go back a year, when the market started to kind of get volatile after we made that 52-week high right over here, and then all of a sudden, essentially what happened was we saw one after another. It was a domino effect. Well, the same thing is starting now again. Greece is first, just like it was a year ago. and it will cascade again to the other countries in the European Union that are having trouble. So the markets, in my opinion, you have to think a bigger pullback is on its way. Whether or not we've topped out officially yet is up in the air. But a bigger pullback to me is definitely on the way as the cascade of dominoes comes through. In addition, I do think the economic news is going to start to stall out here in the U.S. We've had great economic news, but I don't think it will stay as strong or continue to ramp up like it has. I think it's going to stall out, and that means the markets will lose some of their luster in that aspect. All right, let's take a look at the dollar from Friday, see exactly what went on. Dollar got a very, very nice pop, which should not be a surprise to anyone. Why? Well, ultimately, you have to understand that if there's problems around the world, people run to safety in the dollar. And that's exactly what happened here. So again, here's the UUP, which is the tracking ETF. And again, just let me point out here, look at this topping tail back here and look at the fall that ensued. Topping tails are bearish signals on candles. And sure enough, bearish signal right there. And look at the nice, beautiful drop on the dollar. Dollar comes back into this level. Let me just draw a trend line right here, folks. You can see a perfect little gap fill. There was a gap right here on the UUP. And sure enough, if it goes lower, you hit the 200 moving average here. And one thing I told my members here at InTheMoneyStocks.com is that as you came in here and you hit this first level, yeah, could the dollar go a little bit lower, but it's not going to go much lower. You have to figure there's going to be a bounce here in the dollar, and sure enough, you did get that on Friday. Now, the question is it going to continue and maybe go up and hit the 20 moving average? That'll be short-term resistance. It's also a pivot high right here. So again, this line right here is your short-term resistance point, and if you get through that, the 50 moving average, I would generally have a neutral to positive bias on the dollar just because it's only had really one day of bounces. Once you get up into these resistance levels, go back into a neutral stance for now, and we'll see then at this point if the dollar can get through these moving averages. If it clears all the moving averages, then it very well could go back to this pivot double top up here. But again, you would go into a neutral once you hit the first moving average to see if it can get through both, and then you could go back into a bullish stance if it gets through. All right, but right now, again, neutral to positive until it hits the 20, and again, you have great support. This trend line right here all the way down to the 200 moving average, this area is just a ton, and I repeat, a ton of support on the UUP or the dollar. Let's take a look at gold next, the GLD. GLD had a nice little down day on Friday, but again, you're right into the 20 moving average. There's not much you can do there unless you get through that 20 moving average. The one thing I would point out is you do have an in spirit of bearish pattern. Downward movement, sideways consolidation does give us a nice little bearish pattern there, which again, even though you fell on Friday, which is what you'd expect off that bearish pattern, until it gets through that 20 moving average, which is the yellow line right here, I wouldn't really anticipate much more downside. If you get through and you close below that, then I do think gold is going all the way down here on the GLD. And the GLD down here, we're talking about around 161, 162 area. And that, again, should be a very nice support area if it got down there. And that would ultimately be the bearish pattern fully playing out, in my opinion. SLV silver, let's take a look. Silver came down a little bit on Friday. But one thing about silver, it's actually holding a pretty solid consolidation point. I can draw a trend line right here on the charts, right there. And then I can draw one right here as well. And you can see you're just going in this general vicinity. Sideways choppy consolidation. And with the 20 sloping up, you haven't really broken down yet. You've just been going sideways bullish. This is actually known as bullish consolidation. For me, and I told my members this, unless by chance SLV gets up into this range at the 200, there's no way I can really short it. It just can't be done, in my opinion. All right. In addition, you have a great level of support right over here, which we can draw across, which matches just above the 200 or right on the 200 right there. That's your area up there at around $34.35 to 50 cents. Okay? Now, again, let's go back to the USO. I want to cover the USO a little bit. We talked about oil, the Iranian situation, the Syrian situation, what's going on there. And you still have this key trend line that I gave to my members a while back, which, again, has told perfectly the tale of these markets. All right, this, again, is a trend line that I've really been watching since late December, kind of mid to late December 2011. The reason why is because you connect the high here, and to here, and then notice how the market or the oil chart broke out above there, and it looked like it was going to just go sky high, and then it came down and failed. Once it fails, this line becomes a pivot point, and as long as you stay below the line, you can look for downside. And sure enough, we can see we came down, popped back up. You never closed back above it. You closed on it, came back down, opened above it, moved down below it, above it again, and never closed above it. So you really have not closed above this trend line for a long, long time. Even last Thursday and Wednesday, you kind of hammered on it, and again on Friday, you sold off. So the policy that I have is look at these trend lines, understand what they mean as a technical indicator. As long as you remain below this level, downside is the probable solution. if you close above this trend line I drew in, and that therefore above all moving averages, I think the upside potential is very likely to a move into this range. Now, having said that, would I be short gold? I mean, would I be short oil? And the answer is absolutely not. Why would I be short oil when who knows what happens with Iran any day, any minute? You just don't know how it can play out. I mean, that's the scary thing. You know, if something goes on with Iran where there's some missiles fired or whatever, or some bombings, you could literally see oil spike up $10, $15 overnight. And I would never want to put myself in a position to be caught off guard like that. All right, now what I want to do is answer some key questions that I have from my members here in the trading room. And again, we're going to focus on some key charts here. First off, let's take a look at Chipotle Mexican Grill on the daily chart. The question is this a shorting opportunity? Now, in regards to this chart, it's extremely overbought. I mean, if you go back to 2009, this was a $40 stock, and you can see the rise it's had. It's been spectacular. I enjoy their food myself, I have to say. But the bottom line is it overdone? And my answer is yes, it is overdone. Now, once you decide a stock is either oversold or overbought, the question is, you have to ask yourself, is it a short at this current price? And the fact is, we don't have any sort of shorting signal right now. All right, and again, what do I mean by shorting signal? I mean a topping tail, a reversal candle, an engulfing candle, some sort of bear flag of sorts, and we just don't have that at this point. So while I think it is overbought and a good shorting candidate, I have to sit back and wait for the setup. If you give me a good setup, I will take this as a short. I have no problem with that at all. Next up, we have Apple Computer, and everyone wants to know, is Apple overdone? Is it going to sell off? Should I buy in? Should I sell? What should I do? The fact is, it's overbought right now. There's no doubt about it. My shorting analysis is telling me there's a key level at 503 to 505 as a short. Now, it closed at $493.42, so $493.42 on Friday. Even with the market down, it was up 25 cents, which continues to tell me if we get any sort of flat to up day, this does go above $500. Once it gets in the 505 range, I think it's a great put opportunity. If you don't want to risk being actually short the stock, you can buy a couple month out puts and play those. Those can be very, very lucrative. Otherwise, again, I think if you're going to short this, for me personally, I'll be looking at the 505-ish area. I do think it gets there, by the way, folks. But again, if you just look back to late November, I mean, this is amazing. Late November, Apple Computer was trading at around $365. It's now basically at $500 or just under $500 per share. All right, next up, the next question comes in about HOGS. This was not HOGS, HOG. This was a great call, one that I gave out in the weekend. During the week, I do these free videos, as you guys all know, and I actually told you guys about this one, which was a great one, and also CF Industries. We're going to go over both those charts. Now, again, I called out, I think it was last Wednesday or Tuesday, a short on HOG, Harley Davidson, because it pierced a beautiful double top. See this double top right here? All right. See that line? So when it pierced there, that was your shorting opportunity at $47. Sure enough, where's it trading? At $46.09. So again, that's the beauty of this thing. If you know the charts, if you can find these type of charts, they're a high risk reward trade. Very, very high in reward, low in risk. And again, I just want to make something clear. Not only do you have a double top on the chart of HOG here, which gives you a great resistance level to go short, and the chart is extremely extended here. See how extended the chart is? But if you look at the Spider's daily chart, you can also see that the Spiders are extremely extended as well. And that's what you're looking for. You want to see a chart coming into major resistance like a double top that's extended, but you also want to note that the market is extended as well, because we always talk about the wind being best in your sails. Like if you're sailing, you want the wind behind you, not in front of you, going against you. And therefore, if, for instance, if the market was at 52-week lows and HOGS was at a double top, and we thought the market was going to bounce, it would never be as smart of us to do that scenario about shorting HOGS if we think the market's going to have a good rally. But again, being the fact that the market's overdone, you have to look at it and say that's not a bad choice. CF Industries, this was a great one, guys. Congratulations. I know a bunch of you guys, even in the free video, saw this one. And by the way, folks, you can follow me on Twitter, Gareth Soloway on Twitter. Go search me. You can follow me on Twitter. I give updates throughout the day, give trade ideas, and so forth. And also, if you want to take a 7-day free trial here at InTheMoneyStocks.com, I strongly encourage you to do it. The analysis is number one out there. You're not going to get better analysis from a hedge fund. You're not going to get better analysis from any other area out there, any other website. We'll give you trades, swing trades, day trades, whatever you're looking for. We have a service for you. Intraday Stock Chat is for day traders. swing traders go towards the research center. It's awesome. Bottom line, the winners will keep coming. I think I have to make a list of the small cap winners in January, but something like 10 small cap winners, average return of 30 to 50% per trade. Just because again we utilized the January effect in January off of small caps to make us a ton of money. In any case, the CF trade I gave out last week, and this one actually I gave out in the free video as a possibility. And again, look at how beautiful this was. Perfect double top. Markets extended. CF is very extended. Look at the pullback. So you're talking about going short at around the 191, 192 area, and the stock is now all the way, get this, at 180. It was down over $5. Do you guys see that? I mean, that's an amazing pullback in terms of a short. And again, all you're doing is you're looking at the market saying it's overbought. Right? It doesn't necessarily mean the market needs to top that day. If the market goes a little higher, so be it. But as long as you have a good double top, the stock will still pull back. But if you can get the market to pull back too, like we did on Friday, that's where you make the big bucks. All right, now let's take a look at a couple other stocks. Amazon.com is always a classic. Amazon right now, interestingly enough, you have a little bit of an in-spirit of bullish pattern here. As long as this holds and you don't see a close, I would not want to see a close below this line right down here. So as long as Amazon does not close below 180, 150, it could go higher towards gap fill. At gap fill, it's a short. Okay? That would be a great shorting opportunity if it gets up there. But you have bullish consolidation here as long as it does not close. If it's negated 100% if it closes below the 180, 150 level. And upside target, if this bull flag in spirit of works out, is going to be gap fill at around 194. All right? What else do we want to look at? Let's take a look at Exxon Mobil. Now, Exxon looks to me, I mean, it had a beautiful in spirit of bearish pattern here, down to the 50, bounced back to the 20. The next leg down looks like it's going to take you here. My guess is you have more downside in Exxon. Obviously, it closed right on the 50. You have to respect that. But at this point, the chart looks very, very weak to me. Very weak to me. Chevron, let's take a look at that. Chevron also does not look good. Looks like it closed below the 20, right on the 50. You may and you can look at this and say there's a bear flag there, there's another one, a little bit of a reversal flag pattern here, which I don't necessarily look like as a bearish pattern. But bottom line is, I just don't think oil has, assuming nothing happens in Iran, and as things kind of calm down there, if they do, you may have continued downside on Chevron. Do I love it as a short? No, I wouldn't be shorting Chevron. There's way better things to short out there, folks. All right, like the CF and the HOGS and so forth were. All right. Taking a look at Caterpillar, let's take a look at CAT. Now, Caterpillar, again, I really would prefer Caterpillar going up just a little bit more. The reason why is because you haven't reached this double top yet on the chart. See this double top? All right. That's your area. So if you could have some sort of bounce back where you go up to about the 116, 117 level on Caterpillar, I think it's a dead-on short, guys. Dead-on short. Deere, many people wondering about Deere as it's extended. Deere, to me, I do not like it yet. For me, it needs to go here. You give me Deere at this level, and then I start to like it as a shorting opportunity. That's around the 91.5 level. It's a key pivot low and key pivot point right on the charts right there. All right, and again, last but not least, what I want to do is quickly go over just some basic charts like on Google. We should always talk about Google as it is a fun one to analyze. Google had an ugly earnings announcement, took it right to the 200 moving average, now has bounced it back. Interestingly enough, you could make a case you have a head and shoulders developing here on the charts. All right, and again, there's your shoulder, head, and this could be a shoulder if we start to pull back down. Your neckline would actually match perfectly with the 200 moving average, which is even bigger. So again, if you start to fall here on Google, and by chance you take out the 200, this thing is going way lower. Just calculating a target, you're talking about $460 target on Google, if and only if. And remember, guys, head and shoulders does not trigger. It's not even in play until it takes out this neckline. But once it trades below here on a closing basis, the head and shoulders is in play, and downside, believe it or not, would be all the way down here. Very cool chart on this. And by the way, just something else I want to just mention to you guys on the spiders. If you go to your weekly chart on the spiders, you actually have a possibility of a little bit of a head and shoulders here that should be monitored. Now, let me just show you this quickly, and then we'll get on to this and conclude this video. But right there, there's your shoulder, here's your head, here's your other shoulder, and this is only going to be valid if you start to continue to pull back like this. If you take out the pivot high of the head right here, it's negated. I repeat, if you take out 137.18 on the SPY at any time in the future, the head and shoulders is 100% negated. And remember, it only triggers if you break this neckline right here. If it does break that neckline, you're going way lower though. I mean, you would have a pretty cataclysmic fall in the markets underway should you break that line. All right, guys. Now the key is, again, 7-day free trial, no obligation. As long as you cancel before the end of your free trial, there's nothing there. There's no obligation. You don't even have to worry about anything. You can cancel before the end of it and you're good to go. You come to us, 7-day free trial to the Research Center, 7-day free trial to the Intraday Stock Chat. Make money every day swinging the market. The trades are out there. We'll give you the guidance. We're going to give you the swing trades that we take. And again, you get everything you want here at In the Money Stocks, including proprietary technical analysis that will blow your mind. Have a great rest of the weekend, guys. Come join us here at InTheMoneyStocks.com. No Hype Live broadcast tonight. I will be live showing you my charts, answering questions, going over analysis and setups for tomorrow. That's just one part of the Research Center. Come join us here at InTheMoneyStocks.com.